It's Market Day Report. We've got that soybean field, so how about we start there? Soybean trade is in positive territory right now. The November at 11.84.5. It's up 4.25 cents. We're seeing gains on the old crop side as well. Now, speaking of the old crop side, we did see the weekly inspections report. It came out yesterday, didn't come out on Monday because of the holiday, but came out yesterday, and not bad numbers for soybeans. Of course, what we saw out of corn continues to be impressive. Here's soy meal contracts. We're moving higher here after lower trade yesterday. And for bean oil, we're up 93 on the July, 75.29. Every contract positive territory up for the third straight session. I mentioned corn and the inspections being pretty good for the corn as far as exports. Well, look at December. We're right in the middle of the trade range. We were positive about an hour ago, 4.80 1/4. We're down 1 3/4 cents right now. Then over to the wheat market. Here's Chicago, down 11, 624.5. How about hard red? It's just 3 lower, 673 1/4. And finally, spring wheat, and we're lower here. Joe Barker's with CHS Hedging. All right, Joe, those are the numbers, but what's got your attention right now?
Well, a few things. We're all following what's coming out of Washington, D.C. and Tehran on whether there is a deal or there's a framework. And we had the television station said they had the framework, and that was driving energy prices and helped with a weaker opening. Crop progress yesterday confirmed this crop is off to a great start. The second fastest planting progress in 20 years for corn at 86%, soybeans 79, still really good planting progress. We need to get the rest of the wheat off before we can finish planting the beans anyway. We are watching wheat, quite a slide in Chicago wheat compared to Kansas City. So Chicago down 11, Kansas City down 3 as we talk right now. Need to keep an eye on that corn wheat spread. We've taken 30 cents out of the Chicago wheat corn spread in the last 2 weeks. So that's something we're certainly watching as we go along. It appears the early harvest that we're getting out of southern Kansas is not as bad as feared. It's still not good. It's just not as bad as feared. And so that's something to be watched out there. You talked about it just there with soybean oil. We need to keep an eye on crush margins. Processors are still making a significant amount of money, north of 360 on every bushel of soybeans they crush, board crush, that is. You got to think about cash basis in there. But certainly expect processors to continue to be hungry for beans as we move through the summer because crush margins continue to be very good.
I'm glad I'm going to back up here. You mentioned the wheat harvest, not quite as bad as we thought, but not good. You actually lived for a while in southwestern Kansas, didn't you? You got to see some of that firsthand.
I did. In the late 90s, I worked in live hog production in far southwest Kansas, lived in a small town called Johnson City. If anyone's ever been out there, you'd have to be west of Liberal and almost to Colorado to know where Johnson City is. But yes, I lived out there in the late 90s, was in live hog production. And I can tell you that is a culture that lives off of agriculture. It was a fun place to live.
Yeah, absolutely. Joe, great to see you. Thanks for the story there and the insight on the markets. And one I'll keep an eye on, again, is that crush. Joe Barker with CHS Hedging. Back in a moment, more markets on Market Day Report.